Hi, thanks for joining us today, everyone. My name is Helena Jarbakova, and I'm here with my colleague Shan Islam, who will provide us an introduction to CME Group's base metals offering. Shan is responsible for developing new futures and options contracts across the precious, base and ferrous metals suite here at CME Group. I believe prior to joining CME Group, Shan worked both in physical and derivatives commodity trading at Stemco in London and in Zug, where he was focused both on base and ferrous derivatives trading, hedging, as well as structuring.
Hello and welcome to the presentation where you can get to know CME Group base metals, futures and option contracts in a bit more detail. Here we have a short disclaimer. So in this presentation we'll look over the offering that CME Group has in base metals, futures and options, a little bit about the delivery process for physically delivered futures contracts, and then also how you can start trading and accessing our markets. So CME Group is the leading and most diverse financial exchange in the world for trading futures and options, where one can trade contracts across a wide range of commodities and financial assets. CME Group was formed by the 2007 merger of the Chicago Board of Trade, which is the oldest commodity exchange, founded in 1848, and the Chicago Mercantile Exchange, which also has roots back to the 19th century. In 2008, CME Group acquired NYMEX, the New York Mercantile Exchange, which was formed by the merger of NYMEX and COMEX back in 1994. So you may be aware that some financial products such as the euro, dollar and FX trade on CME, agricultural products trade on the CBOT, energy benchmarks such as WTI are available on NYMEX, and also metal benchmarks like copper and aluminium premiums are available on COMEX. You can access the markets through the proprietary front-end platform CME Direct, and both the Globex screen and the OTC clearing venue Clearport, which I will go into more detail later in the presentation, can be accessed through CME Direct. So on the base metal side, I will speak a little bit about the aluminium contract suite we have, the COMEX copper futures and options contracts, and also the zinc contract. So as you can see in the base metal space, we've created futures contracts that are relevant to various regions, be it North America, Europe, or Asia. And these include cash-settled futures contracts, such as the Aluminium Midwest Premium in the US, AUP, and also physically delivered contracts, such as COMEX Copper. And then also in Europe, we have similarly both a duty paid and a duty unpaid aluminium premium contract, but then also physical contracts including lead and zinc. And then in Asia, our offering also expands into MJP, an aluminium premium contract, and also the world's first alumina futures contract, which is basis FOB Australia, and then also continuing our expansion in both cash-settled futures, but also physically delivered contracts. Both lead and zinc are also available in the US, in Asia. So as we look a little bit deeper into our aluminium contract suite. So here at CME, we listen to the needs of our clients and we create relevant new products. So if we look back to what was happening over the last few years in aluminium premiums, we can see that premiums were rising and peaked around November 14 and into early 2015, where they're reaching about $500 a ton, and I believe at the peak they reached somewhere between 20 and 30% of the all-in price. in response, at CME, we created AUP, the Midwest Aluminium Premium. And then we followed on with AEP, the Duty Unpaid European Premium, and also EDP, the paid version, and MJP for Asia. What this did was it allowed market participants the first time to manage their premium risk on exchange. As you can see from this chart, the open interest is growing, and this normally happens when there's actual true commercial hedging occurring. So open interest is a real good indication that we're truly building a market, and physical participants like smelters, extruders, and end users are actually using our contract. You can see from the chart that open interest across all aluminium contracts has been growing consistently in the last few years. And what's interesting here is that this trend defies any concerns that volume might drop, as premium levels have declined from the peak and have become a lot less volatile. But this shows that these futures contracts are becoming deeply embedded in clients' pricing and therefore their risk management. Here you can see that there's a full suite of products that allow the aluminium supply chain to hedge their risk, starting from alumina through to primary aluminium, right down to aluminium alloy futures. Interestingly, AUP, the oldest and most liquid premium, now has buy-side interest, as clients may look to gain exposure to the US aluminium market using a cash-settled futures contract. The contract is also listed out for 60 months forward, allowing long-dated hedging along the curve. And also, if you consider that AEP, the European premium, was launched in September 2015, the growth has also been substantial. All of these contracts are 25 tons, and as you can see, there's been solid growth in both volume and open interest. So if we look at the alumina market, we've had some really good progress recently, and this is fairly remarkable for an industry where there was little hedging using indexes going on. So as you can see, ADV, the average daily volume this month for September, is 140 lots, which is 14,000 tons, while open interest has been hitting record highs nearly every day. So this is an industry that came to us and asked us for cash-settled futures contracts against indexes instead of fixed price or percentage-based contracts that they had previously been hedging. Now we move on to the COMEX copper futures and option contracts. COMEX copper has been around since the 1970s and is a well-established benchmark traded around the globe. Clearly, clients here like to trade simple monthly futures contracts. As you can see, the copper futures have been hitting open interest highs all year, starting in Feb and then in July, right through to August, where we had an all-time high of 337,000 lots on August 16th. Volume growth has always been significant throughout 2016. You can see where the ADV, the average daily volume, has been hitting 116,000 lots this month, which is up from 85,000 lots for the full year of 2016. If you compare this with 2017, where the average is also over 100,000 lots. For us, it's interesting to look at who's trading COMEX copper. As you can see from the pie chart here, where we've taken the commitment of traders report from the CFTC, the US regulator, if we look at who's trading, we've got 21% of it being managed money, but then 19% is producer. And then obviously we've got all of the other commercial business also in there. And this illustrates how true commercials are using COMEX copper to hedge their physical exposure, as well as interest from the financial community. And we find in these futures markets, it's important to have a good mix of different clients trading for different reasons to maintain a healthy ecosystem. We also have liquidity around the clock, as Globex is available almost 24 hours a day to trade. So you can see there's actually a significant amount of volume that gets traded in Asia and Europe, and then also within the Europe-USA time zone crossover. So it shows it's a truly worldwide traded copper benchmark. If we look onto the copper stocks, which have been rising, and COMEX copper stocks are now the second highest stocks on exchange. Currently, there's almost 178,000 tons on warrant. And you can actually find details of the stocks which are published each day on our website at cmegroup.com. This also illustrates how warrant financing activity has increased and is also being supported by this growing inventory. So interestingly, we've also seen good growth in our copper options. We also hit an open interest record of over 12,500 lots on the 25th of September. And with active market makers, both the bid offer and the size of the book have been greatly improved. And as you can see here, options are available to be traded both electronically and also over the counter cleared on exchange. So now we'll move on to our zinc futures contract. So we initially started with a North America physically delivered zinc contract, but again, listening to our client base, they asked for a global duty unpaid physically delivered zinc futures contract. So in May 2017, we allowed both duty paid and duty unpaid material to be eligible for delivery. And we've since opened out global locations, and we have warehouse locations approved in Europe, including Antwerp, Bilbao, Rotterdam and Vlissingen, and also warehouse locations in Asia, including Busan, Johor, Singapore and Port Klang. This is an example of how we're listening to our global customer base and providing them with global contracts. Let's have a deeper dive into the CME delivery process. We'll look at the registration of product, the 3-day cycle, and warehouse shipment responsibilities. So initially, you'll establish a position in the futures market, register product at an exchange-approved warehouse, initiate delivery intentions in Deliveries Plus, and you'll receive or deliver a warrant. Then you pay storage, and you request to remove the product from a warehouse should you wish to. When registering a product, there's different responsibilities upon the customer or the warehouse. So with a customer, they'll deliver the metal to an exchange-approved warehouse, arrange weighing of a product, and then instruct the warehouse to create COMEX warrants. The warehouse will create electronic warrants in Deliveries Plus, schedule payments in or out, and maintain custody and safekeeping of the metal. And we also ask that documents are retained for a period of 5 years. In the 3-day delivery cycle, the first is the delivery intention day. Then there's the notice or invoice day, and then finally the delivery day. On the delivery intention day, a short must submit a notice of intention to deliver in the Deliveries Plus application. On the notice of intent, there must be copper or other metal warrants selected to match the number of positions the seller wishes to deliver. And on the warrant, there'll be information such as the brand, the weight, the warrant number, and the warehouse. Then the allocation notices are sent, which will indicate the parties matched for delivery and the number of contracts to be delivered. The next step is the notice day. On the notice day, the invoice is issued by the clearinghouse to the buyer and the seller. If issued on the next to last of the delivery month, they're issued the prior day to the end of the day. So on the invoice, we'll have the brand, the warrant number, the weight, the total cost of warrants based on settlement price on the intention date, the buyer and seller information, and the approved warehouse where the metal is stored. Reimbursement of storage fees that were prepaid by the owner prior to delivery. The allocation notice and the invoice are not transferable. So it's important to note that the delivery intention day can be issued at any time within the month until the last intent day, and this is what starts that 3-day cycle. And here, the delivery day can occur on any business day during the delivery month. In this instance, the seller receives the electronic transfer of funds banked through clearing, and the buyer receives the electronic warrant in Deliveries Plus. In terms of shipment responsibilities of the warehouse, the customer has a responsibility to instruct their clearing firm to request a cancel for loadout of a warrant in Deliveries Plus, arrange shipment of the metal and coordinate all shipping instructions with the warehouse, pay for all shipping and warehouse charges, and the approved warehouse is not responsible for the transportation into or out of the warehouse. So just a few points in summary. The exchange doesn't generate any revenue from storage and therefore maintains that financial independence from our approved exchange operators. Our market regulation team maintain oversight of the warehouse system. We have specific and structured loadout procedures. There are clear obligations of the warehouse to issue documents. And finally, storage and handling charges are paid through the exchange clearing system. Now we can look at how can you start trading and gain access to CME markets and this great product offering. For starters, you'll need to open up a clearing account with a clearing broker or clearing firm. You'll find that NYMEX and COMEX metals markets are supported by well over 50 clearing firms around the globe. You'll also need to select a front-end trading application to access CME Globex and CME Clearport. Having been a former user of CME Direct and seen its development over the years, it's a really great piece of software and is very well supported by the team. Then you'll also need to figure out what you want to trade, what you want to hedge, and just get on with it. So just to reiterate, CME Globex is the electronic trading platform for futures and options. It's available almost 24 hours a day. And Clearport is the OTC, over-the-counter clearing venue. Here it serves as every buyer to each seller and each seller to every buyer. And therefore it limits credit risk by guaranteeing financial performance of both sides. And again, you can see CME Direct has some really good functionality. In addition to executing prices on screen, you can also view block reported trades, giving you an eye on the cleared market. So if we just look at what the main takeaways are, here at CME we've created products that are regionally specific, but for a global client base. We've got a suite of aluminium futures contracts, allowing the market to manage risk along the value chain. In addition to monthly settled futures contracts, we also have physically delivered contracts, including copper, aluminum, lead, and zinc. In addition to the liquid and transparent COMEX copper futures contract, we also have a copper option contract, which you can trade both electronically and OTC cleared. Again, we have a choice of venues depending on your needs, whether it's Globex or Clearport. There's also capital efficient margining if you trade a number of CME products through the same clearing broker. Here's a set of contact details, and I would urge you to get in contact. We have a team of friendly experts who are available at your disposal. I'd like to thank you for your time, and we do look forward to hearing from you. And on that note, I'll open the virtual floor for Q&A.
Okay, here we have our first question. Can you explain the difference between cash-settled futures, like European aluminium premium, and physically delivered futures like copper?
Yes, of course. Copper, like lead and zinc and aluminum, are physically delivered futures contracts. This means that there is an underlying physical metal. Long futures positions that are run through to expiry will mature into a warrant, i.e. the holder of the warrant is entitled to receive specific underlying metal. Conversely, short paper positions that expire will mean the seller has an obligation to deliver physical metal meeting the contract specifications to the warehouse to satisfy that exchange obligation. Cash-settled futures contracts, on the other hand, are settled against an index or assessment published by a PRA, a price reporting agency. The PRA surveys the market to gather details of a spot market, including trades and transactions, bids, offers, and assessments, and then collating all of this data, they publish the index or the assessment. At the end of the month, an average is taken of all of these data points, and this is the value used to settle the futures contract. We've got base metals contracts using both metal bulletin, such as European premiums, and Platts, such as Midwest Premium Index and assessment prices. Alumina is available to trade on both Metal Bulletin Index and Platts assessment. So we've seen demand for both types of these contracts from our clients, whether it's physically delivered or cash settled. And we're seeing both growth and success in all of them.
So how do you generate a forward curve? That's another question that's just come from the audience.
A forward curve has a variety of uses and can be used for mark-to-market of positions, and it actually provides value to both those trading and also those who just want to see a transparent exchange published forward curve, even if they're not actively trading the contract. Essentially, the forward curve provides a value today for a future or forward point in time. We have a settlements team who take into account the last traded price, resting bids and offers on Globex, our electronic trading platform, and also submitted broker curves and any other reliable source.
This is a good question to follow. Why is the settlement price AEP-EDP for the front month different to the month-to-date average of the index published by Metal Bulletin?
Yeah, this is something I've been asked before. So as I mentioned, the settlement price is a combination of the trades, bids, offers, and broker curves. However, within the pricing month, this can be different to the month-to-date average of the index. However, as the month progresses, there will be convergence, and we would expect the settlement price of a forward curve to match the final average of all those data points published by Metal Bulletin. So within the pricing month, the forward curve is both a mix of the priced section using the index and also that forward expected value. So you can think of it as the forward curve is used to value a position, but the Metal Bulletin average is used in final cash settlement of the futures contract.
Okay, we have time for one more question, and here it is. Are all COMEX warehouses in duty-free zones?
We have warehouse locations in both FTZ, free trade zones, and non-FTZs. All our zinc warehouses are in duty-free locations. However, for aluminum, lead, and copper, it's actually a mix. So if you look at aluminum, copper, and lead, they're duty-paid contracts, and therefore must be cleared of all relevant duties and taxes before being delivered into an exchange-approved warehouse.
Thank you, Sean. That concludes our webinar today. As a reminder, we have a number of resources for you, including online education courses, contract specifications, and warehouse stocks on cmegroup.com. In addition, we have a weekly copper and aluminium reports that you can sign up for. And to add, we will also be hosting another webinar that will introduce you to the COMEX rulebook, transaction and position reporting, as well as position limits and hedge exemptions. Again, thanks for your time today.